Good morning, folks. It's Harry Swaminathan. Looking at this trade idea for today, it's the Emerging Markets ETF. This is the EEM. It's actually one of the largest emerging market ETFs. And because of all the turmoil from Japan, this ETF has been getting hit quite a bit. So as you can see, it's at a low of about 39. This is a 3-year chart. And of course, its low is around 33, but you can see now it's just bouncing off its lower Bollinger Band. And so this is much more of a longer term play because the turmoil in Japan could continue for a while. So the thinking is that, I think, once Japan stabilizes, this ETF will start to improve again because all the emerging markets, China and Thailand and Indonesia, all of them are getting hit because of the Japanese situation. So this thing is bound to bounce back. So the trade I'm looking at for EEM is just a plain long call. You could either do it as a long call or you can do it as a bull call spread. So if you look at, we've got the December series, so lots of time for this to play out. And if you look at the 44 call, right now it's at 39.82, and if you look at the 44 call, it's going for about 74 cents. Now I've got 50 contracts here, but you can choose your contracts appropriately. Here, what I want to do, in fact, I think it may be better to put it as a bull call spread because it might see some downside still because the Japanese situation is not over. They need some definitive action from the Japan finance minister to take some definitive action like Ben Bernanke has done in the US or Mario Draghi in the Eurozone. So maybe what we can do is even put a bull call spread. And if you come here, we can go out to the December series, lots of time, and give it, of course, we don't plan to hold it till then, but we just want to give the trade enough time to play out. So if you did a bull call spread, you would do something like let's say a 40 by 45, or maybe even more than that. Let's try 40 by 45. So that would give you a debit of 1.71, and the reward would obviously be the $5 spread minus that, so which is about 3.3, which is pretty decent. But let's see if we can go a little bit further than that. So 40 by 47, and this would give you a reward of 5. So I think this is good, and you can of course change your contracts as how much you want. I don't want 50. I'll probably do 20 contracts, and so this just takes up $3,920 as margin, and you'd be paying about 1.96. So so the reward would be $5.04. So if you take the look at the risk profile, and what we'll do is, okay, so here it is, and the maximum profit is 10,080. Margin on the trade is 3,920. So this gives enough time for the trade, and over the next couple of months or so. But this is a longer term trade, so you're planning to keep this for at least a month or two until the rebound happens. And even if we can get a decent profit, that's when you would close it out. So anyway, so that's the bull call spread idea for EEM. This is the largest emerging market ETF, and it actually has quite a large volume. So today, of course, volume will be 0, but you can see the open interest. It's huge, and you'll see a lot more action, I think, on the put side, but that's because the current sentiment is negative. But it's kind of a contrarian play, or it's kind of a reversal play at some point. So you want to give this trade enough time, and you also want to plan to hold this trade for at least a month or two. If you have any questions, please send me an email, info@optiontiger.com. Thank you.